Thanksgiving Day with family. I know I did. It was a nice little time to relax. It's a little 50-50, right? Because it's the end of the year. It gets a little bit slower for people and they want to continue to show up to work every day, do what you can, but it's also good to be able to have some time to spend with family and take a little bit of a break, especially for us. So we've been kind of nonstop this year. Everybody that's been in the Monday Morning Minutes every single week or for most weeks, I know you guys have been grinding it out this year. So it's kind of bittersweet. You get to the end of the year, you want to have some fun, and but you also want to keep pushing, right? Record. Alrighty, perfect. So good morning, everybody. Hope you all had a fantastic Thanksgiving and Thanksgiving week last week. We were actually relatively busy Monday and Tuesday. I think everybody was trying to get as much as they could out of the way, so that way they can enjoy their week as you guys should. We're gonna go over some quick news over towards the end of the year. The news, just nothing really crazy comes out. We'll be talking about, I forgot to write it down in my notes, but I know that Fannie Mae has already came out with their increase in loan limits or loan amounts. So we'll talk about that towards the end. But for the most part, there really isn't too much news that comes out towards the end of the year. We're going to be talking about the inflation reports and things like that. So for October, the consumer price index, which measures inflation on the consumer level, came in flat compared to September, and it showed inflation came down to 3.2%. And core CPI, which strips out volatile food and energy prices, lowered to 4%. Now remember, guys, that this is just the headline number. The one that the Fed goes by is PCE, which is lower than which is around 3% right now. And that number for October comes out actually this Thursday. So we'll see what that looks like. The producer price index, which measures inflation on the wholesale level, also declined to 1.3%. And this is important because it does usually lead the CPI, right? If wholesalers are getting their goods at lower prices, they can sell them at lower prices as well. So that kind of helps you whenever you're seeing PPI lower, you will also see CPI lower in the future as well. The National Association of Home Builders Housing Market Index is down to 34. Remember that their index is from 0 to 100, where 50 signifies expansion and below 50 signifies contraction. And we're now well below 50, but in my opinion, I think we have hit the bottom here with this index. And I think we'll see the numbers start climbing again as we get into 2024. But this is something that is continuing to keep inventory down and will continue to keep inventory down for the next couple of years, because remember, just to get housing started, it still takes 6 to 12 months to build because of the permits that you need to pull, the construction that you need to do, all of that stuff. So because we're at such a low level, even as we start to increase back to 50, and that signals expansion, the actual build out for inventory won't be there for the next 12 to 18 months at minimum. And that's really what creates inventory, right? That's what I've spoken to you guys about in the past. It's not necessarily inventory is also done when a seller lists their home, but guess what happens? They're going to be purchasing, right? So it's kind of a wash. What you need is those builders to be building, and those inventory numbers can increase and stay there because you're not having those builders actually purchase those houses themselves, right? You're going to be selling them over to potential buyers. So it's very important for that number to really catch up to what demand is, for us to see, I guess, stabilization in the market, which will in turn in the future decrease home prices.
Like how long?
Sorry, I'm being super clear, but that won't happen for a very, very long time. At least the next 18 to 24 months before we start to see that, if what I think is true, which is we start to climb up and start getting more expansion numbers from National Association of Home Builders. Existing home sales were down 4.1% month over month, and they're down 14.6% year over year, which is also which is causing inventories to steadily increase week over week. The inventory that's actually listed from sellers, right? When they're listing their homes, they're staying in the market a little bit longer. And we're seeing that with existing home sales kind of being down. And they're down 14.6% year over year. But the crazy thing is that we have more listings this year or this time of this year than we did last year. So even with home sales down and those that the listing count increasing, that means that there's going to be a little bit more properties on the market as well. As of October, we had 1.15 million homes for sale, but a lot of those are already pending and off the market. So really by the end of October, we had about 737,000 active listings across the US. That's very, very little. Just to put into perspective, I think 2019 had I saw the number, I think it was close to 1.5 million active listings around this time in 2019. As rates continue to lower, we're seeing mortgage applications have been up for the last 3 weeks. And this is a data point that I really haven't spent too much time on this year, like I did last year because of the volatility in the market. But as mortgage applications increase, it typically does show the demand we're seeing over time because most of those people eventually close in the future, right? So those mortgage application numbers are basically people who applied for a mortgage, whether that be a purchase or a refinance. Most of the time it's a purchase. We are seeing cash out refinances increase a little bit this year or a little bit lately, but not so much, too much, right? It's going to be a lot of that purchase volume that we're seeing. And it seems like everyone believes that 2024 is where we see a slight dip in rates, and that 5 number is what everyone is waiting on. But as soon as 6 hits, we'll also have a good influx of people as well, I believe. And we are not too, I mean, we're not too far from the high 6s, but I think it's going to really take 6.5, 6.25, which is what we were earlier this year, around what was that, like March, April? We're in the 6s for us to kind of see that huge influx that we're expecting. Oh, there's a bunch of people waiting here. I hope you guys haven't been waiting too long. I apologize. Before we see that huge influx of people really coming to the market, especially for 2024, either way, what's going to happen is the same thing that kind of happens next year. It happens every year, right? January is going to be relatively slow in terms of sales because people are kind of picking back up from the holidays and just getting back into the motions and things like that. And then you're going to have February where taxes start to get filed, which now people are going to start applying again, especially the W-2 people, and self-employed people are going to start inquiring and things like that. And then that's when we see that pick up March, April, May, all the way into the summer months. If rates do end up becoming lower early on in the year, which I don't think so, but let's say that they do, then you'll see a higher influx of people starting to apply already in January. But if not, for sure, by February, we'll see that roll over, and those people start coming up and start applying again. Forbearance, okay? Forbearance is catching up. For those of you, for those who were in forbearance for the past few years and started making their mortgage payments again, they may still be in trouble if they haven't been paying attention to their bill. Forbearance is not deferment, okay? So when it comes to deferment is where you actually you are on deferment for, let's say, 6 months. Those 6 payments will be put towards the end of the loan, right? So you don't have to worry about them when you go to sell the home. You know that those 6 months that you didn't pay will just be tacked on to that payoff. That's it. Forbearance is something similar where you don't pay for, let's say, those 6 months that you were approved for. However, interest still accrues within that period, and that interest is going to be due once your forbearance is over, right? It's not due at the end of the loan, it's due when that forbearance is over. So if you have forbearance for 6 months, 12 months, whatever you're approved for the past couple of years, you had to have paid that already. And if you haven't, because you haven't been paying attention, your payments were on auto pay, or whatever the case is, what's happening is that interest continues to accrue and accrue and accrue. And some people are getting foreclosure proceedings sent to their house, and foreclosures are starting because of this. And for a lot of people that are already really tight on money, they may not be able to catch up to that interest that is accrued. And here's another thing: is that they won't be able to take out another loan in order to clear that money, because now they're technically behind, right? Even though they're not behind, they are technically behind because that money has already been due for a certain amount of time. And even though they've been making their mortgage payments consistently over time, they're going to show that they're late because there is interest that hasn't been paid yet. So because of that, you can't take out a mortgage if you're currently late and you're not caught up on your current one. So they're going to have an issue on whether they either find the money or they decide to sell their property, because they won't be able to get into a refinance, especially if they're a few months late on that, because they're always going to ask for that verification of mortgage just to make sure, even if they're doing a HELOC, that HELOC company or that bank is gonna make sure that you're current on your first lien, right? So very important that you keep an eye out for your clients that did go into forbearance the past couple of years. Make sure that they did already catch up to it, and if they haven't, they don't know about it, it's a good time to have a conversation with them before they go into foreclosure proceedings to find out what they can do. Foreclosures are not going to spike up crazy because of this. You know, people can obviously put their market and still sell it, especially in South Florida. Right now, currently foreclosures are 25% under pre-pandemic levels, but you know, just in case, as we kind of get into 2024, foreclosures are going to continue to pick up and go back to normal, right? They're not going to increase above what we've seen in the past, right? We're not going to see 07, 08 because of the amount of equity people have. The average loan to value is 47%, right? But what you're going to see is maybe these foreclosures, the start of foreclosure starts may start to happen, but the actual homes that end up in foreclosure on the market will probably be very little, because those people will be able to sell and they'll have equity in their properties to do so. So that's where you kind of come in, and that makes your job a little bit easier, because to go through that short sale process with the bank and stuff like that is usually very tedious. But if you're able to get somebody and say, hey, you're in foreclosure, you can't really refinance or sell the property unless you're going to do a hard money loan, which you're going to put yourself in even more risk. If you do that, right, the only option you're going to have is pretty much selling. But that's pretty much the update for this week. As November comes to a close, I want to thank you all for the support this year. I love you guys, and I hope the team and I have provided the support and the service that you guys all have expected from us throughout the year. We're probably going to have maybe 1 or 2 more Monday Mortgage Minutes before the end of the year, but I'm going to take this last month to kind of really hone down and fix some holes that I see throughout the business to make sure that we're continuing to improve and help you guys and your clients as well. Heading into 2024, as I feel like we're going to really do really good, all of us that are in these meetings. I think the real estate industry is going to get a slight bounce back next year, and 2025 is really going to be where we kind of take over for the most part, and we're going to see the market really kind of go back in the positive direction. We're not going to see 2020, 2021 again, but with how we are right now in the current in South Florida market, we're going to see some overappraised value stuff and things like that as inventory continues to be squeezed. But we're also going to see more listings as rates come down. So you guys are in the prime position. I hope you guys kind of do the same thing. We're probably going to do the business planning one next week so we can knock it out just in case. And then that way you guys can kind of focus on what you guys want to accomplish for next year. And hopefully you guys do. So I don't know if you guys have any scenarios for me before we go. Any questions on anything that you came across? Oh yeah, last thing, conventional loan limits. I believe they got increased to 750 is the number. So usually that's for loans that are delivered in January. A lot of banks and lenders are already honoring that amount, because then they're just going to hold on to that loan until January to sell it either way. But the new loan increase for conventional 750, that means that probably FHA is probably going to be right around 575, maybe 580 when they come out with their numbers, which they usually do around December time either way. So we'll be hearing from them soon. They usually there's a certain percentage that they do lower than conventional loans. I don't know if you guys have any questions, any scenarios that you came across or anything like that the past 2 weeks, because I know we didn't have Monday Mortgage Minute last week. No? We're good? Okay. All right. Well, we're here. We'll still be working throughout the end of the year. So anything that you need from us, you can reach out to me directly. You guys have my cell, or you can call the office. And we will see you all next week.
Thanks again, Mike.
Thank you, guys. Have a good one.